Hey, welcome to the Guaranteed Retirement Guy Show. Let's talk about annuities that are the best ones for living past age 90. All right, so you might be thinking to yourself, there's no way I'm going to live past 90, but you know what? I've got longevity, so maybe I will. Well, I'm just here to tell you right now, we've got over 700,000 people in the world who are age 100 and older, okay? That's supposed to grow to over 4 million. This is age 100 and older. Now think about the millions that will reach 95, 96, 97, 98. Millions and millions and millions more. Now think about the people that will reach 90, okay? So when you look at that, you're like, all right, well, maybe it's a higher likelihood. I'm just telling you it is, okay? It is a hhigher likelihood. And if you have annuity contracts, which we're going to talk about this, annuities actually statistically make you live longer, okay? They did a study 100 years ago that proved that annuity holders live 3 to 5 years longer. And it's probably because they're like, well, the income's going to continue to come in, and so why die, right? And so you tend to live longer because you don't really have an expiration date mentally. You're like, mentally you're like, well, I gotta make sure I die by this age so that I don't run out of money. Well, with an annuity, you're like, I could care less. I'm going to live as long as I can. I'm going to milk this puppy for as long as I can, right? Okay, so I'm going to share my screen. I'm going to show you how this can work for you and the best annuity contracts for living a long life, okay? Longevity. If you got longevity on your side, maybe you don't. Okay, maybe you don't have longevity on your side, but maybe you're married, and people who are married and in their 60s, statistically, one spouse will live into their mid-90s. So anyways, let me share my screen. We'll go through the numbers. All right, so looking at this, we'll say, all right, $500,000. I'm going to work till I'm 70. I'm going to take Social Security at 70, and I'm going to take income from an annuity at 70. And I only want to put 500 grand into this. Okay, I'm going to leave the rest of the money in the stock market. I'm going to let it grow, and then from this, I'm going to take income. Okay. All right, so maybe, I don't know what your Social Security is at age 70, but typically it's higher, much higher than it is at 62, 65, and even 67. So maybe it's 40 or 50 grand a year. Okay, so with that, plus this annuity, you're going to get $68,466 from ClearSpring or Nationwide. They're the second, and then Delaware is the third. Corebridge is the fourth, okay? And they're all good companies, but if you want older companies, Nationwide's older, and so is Corebridge, okay? They're both 100 years old. So is Global Atlantic. Midland is A+, and they're 119 years old. So you can always choose that. The income's just a little bit less. So it just depends on what you're looking for. If you want highest income, then ClearSpring's the easy winner, or if you want to spread it out and put 250 in one and 250 in another, then you could do that too. But let's think about this, all right? We want to make sure that this income lasts for as long as we do, right? And if you plan on wanting income longer than age 90, then you need to do a lifetime income annuity, okay? Don't do a period certain 30 or a 20, okay? Make sure you do something that is for life, because if you live to 100 or 110, you want to make sure that the income continues to you. Okay, so for this particular one with ClearSpring, you're putting in $500,000, you're letting it sit and grow for 8 years. They're going to take a benefit base of $999,000, multiply it by 6.85, and give you $68,466 the rest of your life. No matter how long you live, it is guaranteed. And so I'm illustrating for this one, it's illustrating till 95, okay? It's just illustrating to your life expectancy. These are lifetime income products, okay? These pay you for as long as you breathe. Okay, so if you live to 120 years old, you're going to continue to get a payout. In fact, they'll probably showcase you on their website. So if we look at this and say, all right, so $1.78 million by the time I reach 95 is a pretty good payout, right? And you'll notice that the balance, this doesn't last very long. It lasts you like your early 80s, and it's gone because you're taking out a high amount of income. You're getting some of the growth of the index. They're giving you a little bit of the S&P 500 that they're buying call options. So, they're buying call options with it, and they're giving you some of the growth, okay? And then you got the rider charges. The rider charges are deducted from the account value, and those rider charges are giving you a pretty high rate of growth during this time period, okay? You see the benefit base growing from 500 to $1 million, so it's doubling, guaranteed. Go right up here. Look at this. It still doubles, guaranteed. This is the guaranteed portion. The non-guaranteed is, well, what if the S&P does nothing, right? We can't guarantee we're going to give you growth in this side of the account, but that's not what you do it for. You do it for the benefit base, and this is guaranteed. This is your pension income. So anyways, if you want growth, we can talk about growth. Those are other products, not this one, okay? This one is for guaranteed income. We want to live past 90 and maybe hit even 100. We want to make sure that income never stops. And if we're married, we want to make sure it never stops for our spouse either. Okay. So, and this one actually is for a spouse as well. And so for this one in particular, let me just go back here. Let's see this. Let's see this here. So this is based off of, yes. So both spouses are 62. If one spouse was older, let's say 69, it's going to change these numbers. Let's see what it looks like here. See if it does change them here. Oh, it doesn't. So it's not doing it because it's still based off of the younger spouse at 62. So that's nice. So if you got a spouse that is older, they're going to still give you the payout based off of the younger spouse. So if your spouse is 20 years younger, then you might think, all right, well, maybe do a single payout for one and then use another portion of your portfolio for your spouses who's a lot younger and do a single payout for them. That is always an option. So for a single payout, if I was to do a single payout, okay, so now they're not on the hook for 2 lives, just one. It's a little bit higher income. It's not much, but it's still higher. It's like 73 grand. So, but it's only guaranteed for your life. Okay, so if you take this for like 20 years and you die and the balance is gone, there is no refund to your beneficiary. So just remember that. But you may not care. Okay, maybe they got other pensions set up for them and they're good to go. So that's fine. But if you do need that income for someone else, absolutely select the joint, okay? Because you want to make sure it is covered for their life as well. Because you might live till 90, but they might live till 107, okay? That is really, really important. So anyways, I wanted to show you how this works. And you can do SPIAs and DIAs. SPIAs are Single Premium Immediate Annuities. DIAs are literally the same thing. They're just deferred annuities. So you can set those up for lifetime as well, and they'll do a cash refund if you don't use the funds up. They just typically do not pay you as much annual income. So you check for yourself. Go to my website, johnstevenson.com, and you can check the calculators for yourself. But the income rider usually always pays the highest annual income. So, and then when you're ready, book a call with me, and we'll look at whatever annuity that you are looking for to make sure that you have enough income to last as long as you do. So I'm not going to try to push you into anything or make you feel pressured. I hate that feeling. And I'm not going to try to product push you, okay? Because there are certain products that pay me more commissions. There are, okay? This one on top here with ClearSpring that you see, they don't pay me the highest commission. I get a lot more with Midland. Midland's great though. I mean, Midland is sometimes it is the best, absolutely the best to choose from. But I think you should still choose and see what is best for you. If you really want to make sure I make a lot of money, then you really need to buy Allianz, okay? Because I'm going to make a ton. I'm going to make another 3%, okay? I'll just tell you, I'll make another 3% commission on that. And a lot of guys will push this. And if you're being pushed to Allianz for a high lifetime income, that's probably the reason. They're justifying it because they're the largest company in the world and they're A+, which is a good reason. But if you're looking for highest income, you're probably going to be upset not knowing about some other A+ rated companies up here as well. So just my thoughts on that. So anyways, if you are interested in talking about annuities for yourself, book a call. There's a link below this video. There is a link at my website, johnstevenson.com. And I would encourage you to check out annuities for yourself and then decide if that's something that you want. And then at that point, if you're comfortable, reach out to me. So anyways, happy to help. Again, if you like the video, subscribe, share, like it, comment below. I'm happy to help. And I'm happy to answer your questions. Just put your comments down below and I'll answer your questions there as well. So thanks again, and we'll see you next time.